Hello traders, the silent trader here. I'm back with part 2 of the mini Forex trading course. Everything will be free here on my YouTube channel, so you don't have to worry. No one will ever try to sell anything to you. No one will promote anything. Just real information for real people. In this video, I will explain exactly what market structure means, how we can identify the trend, and how we can identify micro trends on smaller time frames, as well as how to look for profit opportunities using these principles. First, let's start very simply and easily with a drawing to explain how the market moves. Everyone knows that the market moves in cycles, so it never just goes up or down. You always have oscillating movements, upward movements, downward movements, and so on. But how exactly do we identify what a bullish trend is and what a bearish trend is? It's very simple. A trend is bullish when we make higher highs. Yes, let's say in this example we start from here, that's a low, the price starts from this point, which again is a low. This is the lowest point, as you can see, nothing is lower than this one. At this moment the price starts to rise and reach here. That point is called a high because it's the highest point created by the price so far. From this high, a small rejection is created called a pullback. This pullback will stop at some time in some point and form what we call a higher low. Yes, it's called a higher low because it's higher than the last point here, which was a low. This one is higher than this one, that's why it's called a higher low. But after forming a higher low that is higher than this low, of course, we start to rise again by passing this point. So by passing this point, we create a new high, which is higher than this one. Okay, so this is our higher high, a point higher than the previous one. At this point, we can simply confirm that this is a bullish trend. Okay, the price is rising. Again, price forms a small retracement that creates a new higher low because it's higher than this low. We continue the trend and form a new higher high, which is higher again than this one. So our trend is still bullish. Then comes the pullback. Again, we create a new higher low and so on and so forth. The same things goes for the sell. The bearish trend, we have a fixed point in the price which we call a high. That is this one, a point from which the downward movement starts, forming a low. Then comes the pullback, which will form a lower high because it's lower than this one, continuing then into a lower low because it's lower than this one, and so on and so forth. Okay, so let's say now we have this example. What happens when we go above this higher high and form a new one, which we will call just a high, a simple high? But then the price stopped here, so the price has formed a new high and the pullback follows, which will still be called a higher low because it's above this low. It's a higher low, but the price doesn't have the power to continue, and yeah, this is a moment of impasse in market where many traders are fooled because they will either come with sells from this point and open short positions from here, either they go long from here and also lose their positions. They will think that the trend has changed from bearish to bullish and will lose trades. Attention, the trend has not changed yet to bearish. Even though we have formed this movement and have not made a new higher high, the trend is still not bearish because from this point we can very easily do something like this. We can create another high low and simply go up. Okay, you've probably wondering how we identify that the structure has changed. Again, it's very simple. The structure changes when we form a lower low that will break a previous higher low. So this was the last higher low created, this one, in the bullish trend before the higher high. Okay, the moment when we create a structure, below this a lower low is formed, which is this one. Okay, and officially our structure on this time frame has changed from bullish, okay, rising, upwards to bearish. Okay, the moment we start to make a lower high, which is a point lower than this one, our trend will continue going lower. The same type of structural change is valid when a trend changes from bearish to bullish, like you can see right here. So instead of forming a lower high like you see here, we form a higher high because it's higher than this one, and the trend continues going bullish. Higher high, higher low, higher high, pullback, and so on. Okay, so you might be wondering now, what does this help us with? Well, it helps us identify buying opportunities in a bullish trend and selling opportunities in a bearish trend. The best opportunities that the price can offer us are at these points. In a bullish trend, the best opportunities are higher lows. Yeah, so when we identify that the trend is bullish and we create higher highs and higher lows, we practically have to wait for the next higher low to be made or formed, identify it, and enter a buy position because we know that the trend is bullish. But why do we need to wait for higher low to be formed so we can buy? Because every trader wants to have smaller stop losses and larger profits. If you don't know what a stop loss is, you can check our previous video. So if we were to buy when we break above this high, for example, our transaction would look like this, and it's not a great RR. Okay, our stop loss would be larger, automatically the risk is higher, and the risk to reward ratio decreases. Again, if you don't know what the risk to reward ratio is, I invite you to watch the first video. This area in which the price moves in our direction is small. Okay, we cannot buy it. Most of the time we don't have a very good risk to reward, but if we manage to buy from this point, we'll have a much larger profit because that's a greater distance from here to here. As you can see, if we can buy from here, for example, something like this, the risk to reward is almost 4, okay, 1 to 4, instead of the 1 to 1 that we had from here. Now the same thing applies to a bearish trend. We want to sell at lower highs, which are these points, to sell this whole movement. As you can see, a whole movement, not just half of it, all of it. I'll show you exactly how we can identify these price legs in probably the next video, but for now I want you to understand this simple drawing so you can see that on price. Now let's talk about another fact that is very important about the market, is that it is fractal. So the market is fractal. The price will create trends and micro trends. So let's say this was our 4-hour time frame, okay, 4-hour trend, and on a 4-hour time frame we identified this bullish trend, as you can see right here. But if we look at smaller time frames on 15 minutes, 30 minutes, we can see that we have some micro trends forming on these movements. As you can see here on this price leg creating a new high, we can see a bullish micro trend forming like this. But at the same time we can also see on this correction, on the formation of this higher low, okay, this move, a bearish trend on smaller time frames, as you can see right here. Because there's a pullback on larger time frames, we can observe this structurally on smaller time frames. If we look, we can see that the bearish micro trend is forming, as you can see right here. So why is it important to always know the general direction on larger time frames? Because we don't want to be fooled by these micro trends. Because if we only look at 50 or 30 minutes where these micro trends happens, we can try to enter sales on these lower highs and then be taken out right here when the trend on larger time frames continues bullish. It's very important to know the general direction of the market. The same thing happens of course with lower lows and lower highs, but on these movements we see bearish micro trends with lower highs and lower lows. As you can see here, if we draw the smaller time frame, it will look like this. As you can see, on those pullbacks on those lower highs forming, we have a bullish trend, but only for a short period of time, and then the market changes again and continues in the direction of the higher time frame. Again, we must not be fooled by these micro trends, because on larger time frames we are in a bearish trend, and then we want to look to sell at these points, not to buy on these micro trends, because we will lose. I hope you understand quite well what I'm explaining. It's very simple. Okay, of course it takes a little bit of practice to identify these trends on the real market. So let me show you an example on Euro USD here. Let's identify a trend and see how we can profit from it. Let's say we start from here. Okay, we can observe here that the price formed the high, on which the price dropped, forming a low, after which we have the pullback. Okay, that formed the lower high, then the price continues to drop and forms a new low, which broke the previous structure, becoming the new lower low. As you should realize now, the pullback follows to form our new lower high, and so on and so forth. Pay great attention at this price point, because this structure has managed to surpass a previous high, but it's only a fake move. You have to study the price and discover which moves are fake and which moves are the real ones. If you take a closer look here, you can see that this move did pass across this high. Okay, this was a low, forming a high that is greater than the last high, thus changing our structure from bearish to bullish. Following along, we can observe the price action and see this dance between buyers and sellers. Now, all this structure that seemed so big on the 15-minute time frame is nothing but effective price movements on larger time frame. What do I mean? If we increase the time frame to see the bigger picture, all those trends on 15 minutes are nothing but lower highs and lower lows on the 4-hour time frame. And let me show you. We were here, right here. As you can see, lower lows and lower highs. What do I mean? Even if the general trend was bearish, we could still open some long positions for short-term profiting from this pullback. The same is true for a bullish trend. This move 4-hour time frame is nothing but an entire trend on 15 minutes, higher highs and higher lows. Okay, so if we go to the 15 minutes chart, you can see that right. Okay, so all this trend, all the bullish trend that you saw on the 4-hour time frame was a full trend. Alright, so I hope you understood. If not, please leave me a comment and I will redo the video. If you find it hard to understand, tell me what you think and how you find this mini course so far. Next part will be probably uploaded next week, and the next 2 parts in the following 2 weeks. Well, thank you once again for watching, and see you on the next video. Bye.